Ladies and gentlemen, good day and welcome to Banswara Syntex Limited Q3 and 9 months FY22 earnings conference call. This call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Toshniwal, Managing Director. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and welcome after a long time to our Quarter 3 and 9 months FY22 earnings conference call for Banswara Syntex Limited. I wish that each one of you and your families are healthy, and if you have been through the Omicron third wave, have recovered quickly without any significant health problems. I am joined on the call by SGA, our investor relations advisors, and I hope everyone has had a chance to go through our updated investor presentation, which we uploaded on the exchange and also on our company website. For the benefit of the audience who are joining our earnings call for the first time, I would like to give you a quick overview of the company, followed with a review of the financial performance during the quarter and the 9 months of the current financial year. Banswara Syntex is a vertically integrated textile company which started in 1977, specializing in 3 focus areas: the production of yarn, synthetic yarn and polywool yarn, fabric, and ready-made garments. Our focus has always been on the dress-up clothing and on more value-added suitings. Over the years, we have forayed into many markets in over 50 countries for exports, including the US, UK, Canada, Spain, the developed countries in Europe like Germany, Japan, France, UAE, and Turkey. We've always been a product-oriented company with innovation as an important ingredient of our offering. We have diversified our offerings in textiles, looking to the changing choices and the market conditions. In this respect, we have moved from dress-up clothing to a little more smart casual and offerings which are based on the fact that a lot of people now are working from home and require what is called as more comfortable clothing. And in spite of our not being primarily in the cotton sector, we have been able to achieve within the man-made and polywool business a more relevant offering for the present times. Further, we also expanded our technical fabrics, making automotive fabrics and other technical fabrics which are being supplied to the government in defense. Due to our varied and highly specialized product range, we are able to service a few very good customers in the domestic and international fashion brands. And we are also integrating automation into our process, as well as SAP software and all latest technologies in our factories to produce the high quality product and ensure speed and reliability for our customers. Coming to the financial and operational performance of the company, this year has been definitely better for us. We saw that the third quarter is more or less similar to our second quarter. We were expecting to be better, but there has been pressure on this operating margin due to an increase, a substantial increase in our power and fuel cost. This increased by almost 13.5 crores over the last quarter. For the period of 9 months ended December 21, we have been able to increase our capacity utilization across all of our three key segments, yarn, fabric, and garments. And our production of fabrics and garments increased by 74% in fabrics. We increased by 74%, and in garments by 121% year on year from the 9 months of FY22 compared to last FY21. Our total revenues have increased by 54% year on year in the 9 months of FY22 to rupees 833.8 crores. Our EBITDA has increased by 66.2% year on year to rupees 87.6 crores. This is primarily due to our higher margins in the garment and fabric business. The current EBITDA is at about 10.5% of our turnover. The increase in the business of fabric and garment has helped to partially negate the high impact of our increase in power and fuel cost, which increased significantly in this quarter. The PAT for 9 months FY22 stood at rupees 27.3 crores for the 9 months, as against a loss of 2.9 crores in the 9 months of FY21. For quarter 3 FY22, our proportion of the value-added business, which includes fabric and garments, has increased to 49% of the total sales as compared to 47% in quarter 2 FY22. At present, if you look at the 9 months altogether, we are about 47% of our sales in fabric and garment and 53% of our sales in yarn. The demand from export market increased marginally during the current quarter. We were expecting a much higher demand. However, the third wave dampened that demand from the export to an extent in Europe and USA. The share of exports increased to 44% in quarter 3 FY22 from 40% in quarter 2 FY22. However, our EBITDA margins were impacted, as mentioned earlier, due to the power and fuel cost. This has been mainly due to the coal prices rising exorbitantly. The PAT for the quarter stood at 12.2 crores as against 11.7 in the previous quarter. Now, coming specifically to this increase in the power and fuel cost, we have a peculiar situation in that we are forced to use our own thermal power plant and generate up to 300,000 units internally due to the connection that we have from the Rajasthan State Electricity Board being a 33 kVA connection on a rural feeder and the quality of power not being stable enough in that connection. This leads to us having to rely on our own generation of a consistent energy through the thermal power. And this was something that we are being forced to use and not switch off our power and revert to the State Electricity Board until we get a line which is better, and this work is already on, and we hope that soon we will have consistent power available through RSEB. However, this will take time as the line is being worked upon. In the last quarter, due to the runaway coal prices, we had an increase of 13.5 crores actually in power cost alone. And in fact, after this increase also, we have been able to achieve similar profits in this quarter, which means that our operating margin was much better. For your information, also, traditionally in the past, Banswara has been doing almost 58% of its turnover in FY18 and 19. We did 58% of our turnover in fabric and garments, and so also in FY19 and 20, we did 58% of our turnover in fabric and garments, whereas at this moment we are at 46% 7%. So we still have a gap of almost 10 to 11% from our normal segmental revenue that we get in fabrics and garments, where the fabrics and garments revenue has not increased as much due to our being in the formal clothing sector primarily. We believe that the market, however, continues to be good, and increased costs to an extent are being passed on. We are hopeful that with some coal prices stabilizing, the power and fuel cost will correct sooner, or we will move to the RSCB power as soon as the connection is stabilized. Going ahead, we are confident on the industry growth, and we believe that Banswara is best placed to capture a large pie of the opportunity arising when the latent demand for dress-up clothing is addressed. People are coming back to social gatherings. The marriages are increasing. Ceremonial clothing is back in demand, and we see that the order book position remains good, and the business sentiment and business outlook remains positive, both in the domestic and export markets. We have never wavered from our belief in the kind of fabrics and garments that we produce and our yarn quality that supports it. The yarn business is experiencing a very, very good buoyant demand at the moment. However, it seems that the fabric and the garment demand is also coming back with equal vigor. The order book visibility is high in fabric and garment, and we are focusing on improving capacity utilization at these segments. I would like to say a little bit more about many of the cost reductions we have achieved in this COVID period in the last 2 years will be permanent, and we have a leaner cost structure. We have reduced significant portion of employees. A higher productivity per employee has been achieved. We agree that our recovery is taking a little longer than many others who have been in the cotton segment. Primarily in the cotton business, there has been a boom due to the fact that the Chinese cotton is not preferred in the USA and in many other countries, with the concern that they have on human rights violations. This did not happen in synthetics. However, the synthetic demand due to the high prices of cotton now stand a great opportunity, and we see that the demand in synthetics is every day increasing, and as soon as this third wave part is now, which we hope is getting over, we are seeing the pickup already in our order book. Now, I think that the recovery for us as compared to the casual sector has been a little bit slower, but we expect that this will soon catch up. So I think that's all I have to say for now, and look forward to hear from all of you, your questions, and I'm happy to answer what I can. Thank you, everyone.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Yash Agarwal from JM Financial. Please go ahead.
Yeah. Hi. Good afternoon, sir, and congrats on a good set of numbers. My first question was that if I see quarter on quarter, we mentioned that the utilization of fabric and garment went up from 67 and 51 to 71 and 54. Then why is there a quarter on quarter decline in revenues? That's something which I wanted to understand.
The decline in revenue from the last quarter is very marginally less. No? I mean, we are talking about a decline from 312 to 307. That is hardly significant in that sense, because we had a lot of goods which are produced and not lifted in the fabric and garment business due to the third wave. We had a lot of, let's say, postponements on delivery. So we couldn't translate it into the actual turnover.
Got it. Got it. And what would be the utilization currently of these fabric and garment units? Are they further higher or they are at that level?
So in quarter 4, the utilization has improved even more. And that's why I was mentioning that our target is to get to 58-60% utilization of our turnover. Not utilization, I mean get to 60% of our turnover in fabric and garment, which at present is at 47%.
Sure.
Right? So this can be achieved when right now our garment utilization is, I think, close to 85%. And our fabric utilization is close to 75%.
And when do you see that happening, the utilization going up to that level?
So this 75% in fabric utilization at the moment is expected to go up to 85-90% from the next year onwards. So let's say financial year 22-23, we definitely hope to achieve this.
Got it. Got it. Also, given the fact that, coal and all costs are moving up substantially even as we speak, what sort of price increase are we able to take on the value-added segment, and is it immediate or do you feel there will be a lag, in this? Yeah.
To some extent, we have been able to get 5 to 7% increases across our garment and fabric prices. And yarn prices have even been more elastic, and we have been able to increase yarn prices quite significantly. So we're not sure if the yarn price will continue to be as buoyant as it has. But definitely now, inflation as a factor in the garment and in the fabric is being accepted by most customers, and they are paying higher.
Got it. Got it. Got it. And so also, what is the capex plan, for the next 12 to 24 months, or we're just focusing on reducing our debt even from here?
Yeah, the capex plan we had earlier communicated as well. It is about 80 crores. And this is capex which is really being used to make our sustainability initiatives, our power situation, which will be a combination of the solar power as well as making sure that we have the SEB power available rather than coal. Moving away from coal, sustainability of all our initiatives to ensure that the water and air quality that we use, the carbon footprint is reduced. So there is a lot of investment happening in those areas. Plus, there is modernization and a little bit of what we may call maintenance. So that's all that we are doing. There is no more capex planned. The capacity already exists both in the fabric and garment division to increase turnover. We have only to make sure that our customers, when they come back, are happy to take from us. Moving to the China Plus One strategy for a lot of the customers is a reality now. And the only challenge has been that the demand that they had for our kind of product, both in garments and fabric, was low due to this third wave. Once this clears out, that demand should increase substantially.
Sure. And has there been any impact on the domestic demand for garments and fabrics, in the current month, in the Omicron month, or it's been relatively healthy?
The domestic has been slightly down, but not much. In fact, it has been much more robust than the export demand. And we see that the domestic sentiment towards whatever they want to buy from us, all our key customers, whether it is the Aditya Birla Group and Madura or Arvind or Raymond's, everyone, all the brands in India are now looking at increasing their exposure with us.
Sure, sure. Thank you so much for answering all my questions.
Thank you, Yash.
Thank you. The next question is from the line of Bajrang Bafna from Sunidhi Security and Finance. Please go ahead.
Congratulations for good set of numbers, Ravi sir. Just on the Couple of questions. One, you rightly pointed out that power was the major, issue during the quarter where, we have to lift, the high coal prices, and that has impacted our margins. And you are already on course to go, the cost normalization maybe in next couple of months. But you have already, indicated that there is some investments which is going on the solar power side. So I just want to understand from a broader, strategy perspective that, if we try to compare India to China, on the this energy cost side, if we come to the solar power, use to a great extent, probably, will be more competitive with other parts of the world in terms of energy cost utilization. So when can we expect, this solar to be meaningful for our company and will be getting, major chunk of our power requirement through solar? If you could highlight that and what sort of savings that you are looking at will be really helpful.
Right. Thank you, Bhavnaji. So I think, you've raised a very important point about the competitiveness of India to China, and particularly in the power part, because power is a major cost of our textile business. So we are seeing that now. We had fortunately ordered all our solar power for about 4.5 megawatts. Just many of the increases happened in the solar panel cost. Solar panel costs have gone up. So actually, if one now wants to put up solar power, it is a little bit more expensive than what it was maybe a year ago. However, even now, the return on this is significantly good, and maybe about 3 to 3.5 years for all the money that you put into solar, you get a return back at the current power prices. We have put in about 18 crores currently, which we will be spending up to March 23, in which we will be getting around 4.5 megawatts of solar power, and we will continue to invest to basically see to it that we use solar power in the day, and in the evening, and once the sun is down, we are able to buy cheaper rate electricity from the state electricity board. So the good part about solar is that it's available during the day when the energy costs are higher, and when it's not available, you can take lower power cost off the grid. And this is exactly the economy we wish to achieve and move away from coal. So most others have been better than us in moving away from coal faster. This has been a weakness which we acknowledge, and we are now on the job to make sure that this weakness is removed, mainly because it is much cheaper now, and we to buy from the SEB, and it is not our business to really produce power. Our business is to remain sustainable and be able to give customers the kind of product we have without an impact on the environment. So we have already made a big initiative in using recycled polyester, where Banswara is ahead of most others in this curve, and our customers are appreciating that we are able to give a high quality product even with recycled fiber, and we have solved many of the challenges that are associated with using recycled fiber to produce high quality products. So I think that sustainability means the solar initiative, as well as having a clean footprint on your water and other carbon footprint is important, and for this we need to stop coal.
Got it. So, sir, this 4.5 megawatt, I hope it will come by the end of this financial year. Are we going to further invest in the solar side, maybe in FY23 or in FY24 to, get our,
yes, we will.
Requirement more from solar?
Yes, we will. We will continue to invest in that, and as and when panel costs may stabilize, and whenever we see the opportunity, we will continue to invest. We have enough land available on our rooftops itself, and we have enough within our 100-acre complex that we have in Banswara to be able to theoretically install a capacity of, I think, close to 24-25 megawatts. That exists, and if we do that, then more or less during the day at 8 hours, one could literally run on solar power.
Okay, you said 25 to 30 megawatts will
Yes.
be sufficient for us to meet the complete requirement of ours.
Absolutely. But the point is that it only gets used for 8 hours a day.
Yeah, that I got. In the evening, you can get that SEB power to,
Correct. Correct. So that's a good balance, which most mills have done, in fact, much more ahead of us. We have been slow on this curve.
Okay. So after this 4.5 megawatt, what will be the total solar that we will be having, or this is the first one that we are doing?
This is the first major one we are doing. We have done only about 350 kilowatts so far, just as an experiment before.
Okay. And my second question pertains to, again on the China side, as you also commented on your opening remarks, that on the cotton side, that's a complete ban, from US because of those human right issues. But the similar thing is not applicable to synthetics yet. But, in the current season, there are two things which I want to understand from you. One is that, when the cotton prices have gone significantly higher right now, my understanding is that the mixing of synthetic to the cotton is going to be higher, to minimize the cost impact that most of the the garment manufacturers are facing at this point of time, both on the domestic as well as on the global side. And my second question is that what exactly do you see from a broader strategy perspective for India, that we become more and more competitive vis-a-vis China when we'll talk about synthetics especially?
Right. So even in synthetics, the largest field, of course, is 100% polyester, filament yarn. And in 100% polyester filament, India has become significantly competitive also, with large capacities existing. We have one of the largest polyester fiber capacities also for spun polyester yarn and spun polyviscose blended yarn. Also, we have Grasim, which supplies the viscose, which is the largest producer of viscose in the world. So as far as raw materials are concerned, whether it is filament yarn, polyester fiber, or viscose fiber, we are very strong. And this is an advantage for us there are a few key players in India, Banswara Syntex being one of the largest units that is doing fiber-dyed yarns and fabrics made from fiber-dyed yarns, whose main applications are in the suiting business and uniform business, where we have an advantage over piece-dyed goods that China does. When you do piece-dyed, you get color continuity challenges and color fastness issues. Our product is inherently superior to the Chinese product in fiber-dyed, and this is the reason we are trying to use this as a lever to be able to go to the customers. Traditionally, we used to be more expensive than the Chinese. When we have now examined our costs after the COVID and we have reduced our cost structures, become leaner, we find that we are able to match the Chinese prices and still get an EBITDA margin, which is good for fabric and for garment. So we find now that we don't need to do more than offer the same prices China is offering, offer the lead time that they are being able to do, and the customer will come to us. They are giving us the opportunity. Of course, they won't give us a better price than China. And of course, they won't give us any advantage in lead time. They will want both from us. And I think we are able to find a way to reduce, and we have reduced our lead times from 60 days to 45 days for the fabric. We are able to, as a vertical mill, offer a package garment from our Surat and Daman unit and deliver into the Bombay port very quickly within another 30 days. So in 75 days, we are able to get a garment onto a ship and moving for our Western markets and even Japan and Korea. So we are able to really compete with China effectively with a good planning and with material and raw material available. I don't see why we will not be a significant competitor to China in the synthetic business.
Thank you, Mr. Bafna. May we request that you return to the question queue for follow-up questions?
Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Securities. Please go ahead.
Yes, sir. In one of the previous calls in December, we mentioned that we were running at about 140 crore of revenue per month run rate. I'm just wondering when the quarter numbers were there. So,
140 crores, you said?
Yeah.
I don't think we gave 140 crores anytime during this year. You're talking about pre-COVID.
No. It was about communication was about 140, or let's say communication was about a slightly higher revenue run rate in the past quarter's communication. So I'm just wondering, is there any challenges that we are facing in terms of the revenue ramp up? And second, this asset that we have of yarn is any case 90% plus utilized, but combined asset of yarn plus fabric plus garment, what kind of revenue potential do you see here? If you could help us understand, when will you achieve that revenue potential?
Yeah, so 140 crore revenue per month, we can probably get in the next quarter, but that will be more for FY23. Right now, we are thinking of closing at about a revenue of 1150, and we have in this financial year 22. And we are right now at 822. So 822 to 1150 is what we'll achieve in the next quarter. So I think that run rate is already a little bit better than what run rate we've been achieving so far. So 330 for the quarter as compared to, let's say, 310 or 37 that we have got in the last two quarters. So that's about 110. From 110 to get to 140, like I said, right now our fabric division is at 75% utilization and the garment is at 80, 85. This will ramp up and we will have our garment utilization have increasing both in the number of jackets we make and value-added product we make. Even our worsted sales and type of product we have in fabric is improving. So the challenge has been that the more expensive fabrics have been selling less since we have been selling less suits. Now we are seeing the trend reverse and we are getting more orders for wool and for poly wool and for more expensive fabrics that are coming into suits. So we can see that the revenue ramp up will improve from the next quarter onwards.
And what happens to the margin? Because some years back we were doing 12-13% margin.
Right. So, we expect to get back to 13% again for the next year, for sure. And then, eventually our target is to get to 15% in 2-3 years from now. This is where we remain. And we continue to be focused on our strength in polyviscose and polywool and synthetics. The cotton business is growing a lot, but, this is not our field. Our field remains with this.
My last question is, with maintenance capex only outlined by us and few capexes like a solar power.
Yeah.
What happens to the debt number over the next 3 years?
So the debt will continue to drop, and we are expecting that we will be debt free to some extent. With a minor amount to be given because we are doing some modernization, we'll be always borrowing. But overall, our cost for whatever finance we use will continue to drop.
So your capex will be less depreciation?
The capex that we do
will be less than the depreciation. You have a 50-55 crore depreciation number.
Yeah. So capex is going to be this year a little bit more, 80 crores. Because we are doing significant amount of power in the solar and whatever costs we have to improve the infrastructure. But our credit rating already improved, and we have now moved to AAA minus, 3 notches better. A minus. Sorry, we moved to A minus, and that's already improved our interest costs that we are paying, and. I think that more or less they'll be on par, the depreciation and our investment.
80 crores is for 22.
Correct.
And that
23,
number
22, 23, not 22.
22, 23, both years put together, or 22, 80 crores and 23?
FY23.
FY23 is 80 crore.
Correct. The plan.
Okay. And
depreciation will be maybe around 50, 60,
yeah,
something like that. So
and
a little bit more.
That number at year end, in your opinion, should be what?
About the same level as we are now. So it's about about 200 crores or so.
200 to 50. Okay.
Yeah, 200 to 50.
Okay, sir. Thank you very much.
Thank you, Pritesh.
Just one clarification. This power cost impact,
yeah,
right, will continue further, right? Because
it will continue for at least a couple of quarters, maybe, if the coal price doesn't go down.
Yeah. Okay, and then it should, with a better utilization of the asset, you should
We'll get double benefits. One will be the reduction in the power cost, which will equalize us to the state electricity board cost, and we'll be where everyone is. Right now, we are getting a better operating margin, but our cost of power being more expensive, we are having to give away that. So this will take about 6 months to neutralize, or if the coal cost goes down, we'll be lucky.
So this solar power asset will come when? Next year?
Solar power will also not take care of the full thing. What we have to do is move to the state electricity board power away from our 33 kVA to the 132 kVA connection. That is in work, and it takes a little bit time with RSCB to do that.
And what's your total consumption of power at the Banswara complex?
We consume around roughly more or less 450,000 units a day.
Okay. So if you have to convert it to megawatt usage per annum?
The megawatt consumption will be roughly around, I think, 25 or 27, something like that.
Okay. Out of that, you are putting the first 4.5 megawatt.
Correct. So it's there's just maybe about 20%.
Okay. And this solar power will come in the year end, right? Or next year?
No. Solar power should start in April.
Okay.
April, May, it will be beginning, the 4.5 megawatts.
Okay. Thank you very much.
Yeah.
Thank you. The next question is from the line of Janice Cheda from Spark Capital. Please go ahead.
Good afternoon, sir. Am I audible?
Yeah, hi.
Yeah. I actually wanted to understand on the industrial perspective as China Plus One story is playing out mainly for cotton yarn, or is it?
Sorry to interrupt you, Mr. Cheda. The audio is not clear. Please use the handset mode.
Yes, sir.
Hello, is it better?
Yeah, much better.
Yeah. I just wanted to get an understanding from the industrial perspective that China Plus One story, which is happening right now in the textiles. Is it only for the cotton yarns, or is it benefiting companies like you who are into synthetic or blended yarns as well?
It is showing a benefit to us as well in terms of the demand from both the US and European and customers all over the world. The difference is that there is no particular ban, so China continues to be a competitor in the synthetic part of the business. However, the supply chains are moving more towards Bangladesh and Sri Lanka and India to supply the garments. So this is why we are in a better position to provide, if we can match the price of the Chinese, the goods from region of the world. And I think this is going to be a significant game changer where we can see that over this period of time, as the treaties are playing out, if we can have a FTA coming in with UK, or if we can have something happening with Australia. So just like already we have an FTA with Japan and with Korea, and we are seeing significant business increasing there because of the FTA already being operative for so many years and the interest moving away from China now. So I think that it's only a question of maybe a year or two, and you can see that the Chinese have moved out of many of the woolen worsted businesses because their own consumption domestically has increased and the capacities are not increasing significantly. The Chinese are not taking as much of an interest in the overall textile segment as they are in many other businesses. And I think there is no reason to assume that now synthetics is something where we will not experience the China Plus One working equally.
Hello.
Yeah.
Yeah. What is the, if it's possible to give a number, what is the size of the market that is shifting out from China, and how much of that is coming to India?
Well, all we need is maybe 2% or 1% of the shift to happen globally. Because China controls, I think, around 36 to 37% of the global trade. And we have maybe less than 5%.
And in terms of value, what would it be?
In terms of value, I have no idea. But it's significant amount of billions of dollars. So there's really if we got a 1% shift away from China, we would be really floating in orders.
Okay. Thank you so much.
Thank you. The next question is from the line of Neeraj Mansinka from White Pine Investment Management. Please go ahead.
Hi, thank you, sir, and opportunity. I just wanted to understand the demand of the yarn which is picked up as well as the fabric and garment. Do you think it is more related to pent up, or do you think it's more to do with the regular intake of demand?
Yeah, so I would think that, the yarn business has a very good demand, and even more so than our fabric and garment business, primarily because a lot of end users for yarn now have got significantly higher demand than before, like say for home furnishing, mattresses, and various other applications when people in the pandemic have increased consumption in those areas. The apparel business has overall gone down, but yet we are experiencing, so we haven't come back to our original apparel demand pre-pandemic. We have not yet experienced the pent-up demand. This is just a filling which is happening of the amount of stores which are now going empty, and they're just wanting to fill back the goods into the stores. The pent-up demand is yet to come, in my view.
Okay. So then what has changed that the utilization is sustained at 90%? Because pre-COVID, the margins was not as high as it is right now. So I wanted to understand.
So in yarn, this is primarily because a lot of the yarn capacity that is globally there with China is not working anymore. For whatever reason, that capacity has been shut. A lot of the people never went back to work after COVID into the yarn business at all in China.
You're talking about the PV yarn that you're making, right?
PV, cotton, most of the yarns, even synthetic and polywool yarns.
Okay.
The yarn capacity globally there is a shift. There is a shift in the yarn capacity utilization from China towards other countries.
So then it would imply a very high growth rate in the export orders in the yarn side. Is it a right statement?
It is true. It is true.
But India doesn't have so much capacity. Then how do companies like you will add? How do you envisage going forward on that?
So our capacity is almost, we are producing 3,000 tons of yarn per month in polyviscose, and we produce about 150 tons in polywool, and all of it is specialty yarns which are dyed. So this is a significant capacity on any global level. So I don't see, why we should increase further capacities right now, even though the government is offering the PLI and all that. At some point, some of the capacities globally that are not being used at the moment will revive when the pent-up demand and when all of demand revives. So we are being cautious in making sure that we improve the overall margin and type of product and type of customers we want to service. If we can do both those things, without much risk in further investment, we will be able to improve our profitability and utilization.
And if you have to put a number, like say you're utilizing optimally most of the yarn and the fabric and garment, what can be the revenue number on today's revenues, on today's realization?
We're talking about 1,600 crores is possible.
Okay.
And at 1,600 crores, 2 years or one from now, we could have a EBITDA margin of maybe 15% and be at around 240 to 260 EBITDA.
Got it. And so can you just share some understanding of the prices of the yarn in the market? How has it moved since end of quarter, December, and now? Just if you can give some color on that.
So I think that the prices of yarn have been moving even higher than the raw material price increases. And this is because the demand has been significantly high and there's a shortage. Like you said, the export demand also is there and domestic demand is also there. So there is, due to the supply chain restrictions and material availability being low, people are willing to pay higher prices. And I think this higher prices has been almost to the extent of 10% increase, maybe about 30 to 35 rupees a kilo has been increases which have happened in the last 2-3 months.
Okay. And how much would that flow? Is the full impact already there in the Q3 numbers, or it will come in the Q4 effectively?
A lot of the impact will come in the Q4 because we didn't manage to clear a lot of the stock of goods in finished products in fabric and garment where the lifting turned slow. Okay. So all of that, when it gets and we get our stock position down to a normal level, we will see that improvement in quarter 4.
So then the margins can be a reasonable improvement in the fourth quarter, right? Because the current scenario.
Yeah, because it will be more or less the same margin. I don't see the big change between quarter 4 and quarter 3 in margin. But there will be better turnover overall. And therefore the figures for quarter 4 should be slightly better than what we have had for quarter 3 for sure. Always we have been best in the last quarter.
Got it. So last question, you don't envisage yourself adding capacity in any of these products like fabric or garment, say 3 years or 4 years down the line?
We are adding capacity in knitting, and we are doing value-added knits in polyviscose and polywool blends. And this is where we are making some investments, but it's not huge. It will be maybe 8 or 10 crore rupees in this kind of knitting, and our finishing should be able to take care of it. So some additions in finishing equipment, some additions in knitting. That's about what we are talking about. Once we have achieved the 1,600 crore turnover, then we can think of a new greenfield investment. And we are expanding some capacity in our garment division. So the garment division we have restructured and we have added some more capacities because we see that the garment business will be important. And at that point, we are also thinking now of making a foray into direct-to-consumer brands, and we're looking at some brands that we may wish to acquire.
But won't it envisage a larger investment on a huge timeline for that, or just a thought on that?
So at this point, we are not looking at making an aggressive investment with the PLI. We are looking more at consolidating our EBITDA margin and making sure that whatever funds we have are deployed towards making infrastructure very robust.
Got it. Got it, sir. Thank you very much.
Thank you. The next question is from the line of Sumesh Guleria from Green Portfolio. Please go ahead.
Hi, sir. My question is on the joint venture side, Chapter 1. So last year we sold some 10% stake to Concall, the Korean company, the automotive interior company. And suddenly after that, my revenue went up from 29 to 63 crores on the JV. So what exactly is happening in that JV, and why exactly did we sell that 10% stake?
Yeah, so the 10% stake selling to Concall was strategic because it allows us access to the Korean chai ball and all of the Korean makers. So it allowed us access to Hyundai and Kia and all of the motors that are being made by the Korean companies. So this is, typically how the automotive industry works, wherein they tend to favor certain companies to work with. So I think that's one of the reasons why the turnover we saw was increasing. So now we have access to some European as well as the Chinese, the Korean, and some of the US makers on the cars. So I think that the automotive industry, the only constraint has been the supply of chips. Otherwise, our automotive business would have grown even more. And within this joint venture, we have also opened another unit now in Chennai. So I think there will be some growth happening. But for the next 3-4 months, there are headwinds due to chip supply.
So historically, this JV hasn't performed that well. I mean, it was most of the years, for 7-8 years, it was loss making, and last year it made a PAT of around 1.53 crore. So what exactly can we expect in like 2-3 years? Like, will it be contributing significantly to my, significant amount of revenue or PAT?
Not really that significantly. We do see that it helps our capacity utilization, and that's why it is important for us in a period where in this whole last 2 years we were struggling to use capacity in the formal sector. This particular amount of fabric which we were producing for the automotive business at least kept us going, and it fills that capacity hole.
So it's a more of an internal consumption. So we are catering it to the JV, right?
Absolutely.
Our own. Okay. Sir, my next question is on the Daman government division plan. So, So last time I read somewhere that you're planning for some larger campus in Daman, so to bring the entire government under one roof. So what will happen to the Surat plant, and what kind of capex outflow we can expect over here, and what is the current status of that outflow? I mean,
right. Thank you. See, the reason is that now we are consolidating our garment business for all of the compliances and having a factory which is compliant with all regulations when we have to service customers like Uniqlo and Zara. This was the reason to shift a lot of it to the unit in Daman. And Surat will continue to be an SEZ. And as far as the SEZ rules are concerned, if they change, it will help us if we are able to also sell from Surat into the domestic market. Because sometimes domestic demand is higher and sometimes export demand is higher, and we never know which one. So if we can have the flexibility if the SEZ rules change, that will be an added bonus. Otherwise, we continue to use the SEZ for the purposes of only export, and Daman as a flexible unit for both exports and domestic supply.
Okay. And sir, so significant amount of capex we are doing there for that expansion. So can we quantify that, the number? And what is the current status of that?
It's only about 10 to 15 crores of money that has been spent in Daman and Surat, no more than that. So that's going to just allow us to get to a level where maybe we can get to 350 crores of turnover in our garment business.
So for next year, financially 23, right?
I don't know exactly if it will be achieved in 23, or maybe it'll take another more 6 months or so to be able to get to that run rate.
So capacity per se, if how much capacity will be improved, my total capacity under garment division because of this?
So what we are doing is we will have maybe about 400,000 pants per month, and we will have up to about 70,000 jackets per month. And right now our ratio of jackets has fallen, and the pants part is better in utilization. So, as soon as the value-added jackets part becomes back to that 60,000-70,000 figures, we'll see that the EBITDA margin will significantly improve in the time.
No, sir. Actually, my question was so this 4,000 and 70,000, so this is my capacity. So once I, do that 10-15 crore capex in Daman, so then what will be the additional capacity that I might be, using?
Not much. It will just increase my jacket capacity from maybe 60,000 to 90,000.
Okay. So I have another last question, if I may ask. So Uniqlo, Zara, and H&M, sir, you use the word strategic partnership, especially on the Uniqlo side. Yes. So what exactly does that strategic mean, and can you give some insight on that?
Well, what we mean is that when you're talking about these large customers who are billions of dollars of companies, they're Uniqlo, for example, has got a significant presence in India also, which they have planned. We are wanting to be adopted as their mother mill for certain products in polywool and polyviscose. And if that happens, we will be a global supplier to them for this product across all of the demand they may have anywhere in the world. So we're working towards that with them and trying to replace the Chinese products with what can come out of India.
And are we doing that with Zara and H&M as of now? Because the same terminology was used for Zara and H&M also.
No, at this moment, Uniqlo is stronger, and Zara and H&M have been in the pandemic. So we are trying to revive the relationship after the pandemic. They moved back to Turkey in a way and tried to stay more closer to Europe. So they have not yet been engaging in a active dialogue yet. We are hoping that they will come back post this whole settling down of the third wave.
Okay, sir. And last question, sir. Any further JVs? Because there was talk like you will be entering into some strategic JVs with some companies in the pipeline. So anything happening on that part?
No. There's no plan for JVs. In fact, we are quite confident now that having learned what we have from both the French as well as the Portuguese partnerships that we've had, we understand what is required to be delivering European quality and to be able to make the kind of product that the customers want. And there's no significant add-on by having a JV with a European customer. We'll only be giving away margin. So we are going to continue on our own and address the customers directly, and we don't see the need for the name to be European or adding another cost on that front.
Okay, sir. Thank you, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Riken Gopani from Capri Global. Please go ahead.
Hi, sir. Thank you for the opportunity. Firstly, I wanted to understand if I look at the segment-wise revenues historically, still your revenues in fabric and garment would be at least 30-40% lower than what you've achieved at the peak in the past. Now, given the China Plus story, as well as now that the unlock is sort of achieved and the order books that you have, what visibility you have in achieving, let's say, fabric I think has achieved 600 crores peak revenue in the past and 300 crores for garment. What time frame do you think you would be able to achieve these peak numbers and surpass them going forward?
Yeah, so we would say at the outset it'll begin to happen in 22-23, and by 23-24 we should definitely surpass it.
Okay. So, apart from the fact that you mentioned that it is more to do with also our presence more being in the formal segment, are there any other factors which have also impacted our ability to, let's say, reach there faster than what other cotton players would have seen?
No real other reason at all. It's just that our customers have been mainly the best of the suit people and the one who are more in the wing. And this has always been challenging in the last 2 years.
Right. So, sir, while you did mention that you are sort of moving into the categories like casuals where there is a higher demand today, what would be the proportion today, and could it be possible for you to expand that to a meaningful number in the medium term?
So we are moving into more fabrics for pants with stretch, and that stretch fabrics for pants which go into chinos or into 5-pocket jeans. That part is the segment which we have expanded considerably, and maybe it's right now around 25-30% of our overall fabric production, which used to be only maybe about 5 or 10% before. So this has helped us to move into a smart casual category, and I think it could go up to maybe 30-40%, but we don't intend to get out of the suit business. We think that the suit business will come back. It's just a question of time, and people will be back to dressing up and getting back to work all over the world the way they used to. This is just a period which has been very unusual for the last 2 years in terms of the trends. then there will be a nostalgia to going back to the suit, I'm sure.
And for you, this segment mix within fabric or let's say going between suits or the smart casuals, does it change the realization or the margins in any way, or is it sort of similar?
The margins will not change significantly. When you're talking about very casual clothing like knits or T-shirts or shorts and stuff like that, there the margins are lower. But as we're talking about smart casual to dress up and suits, there's not significant difference for us.
Understood. I have one question on the export segment. That's about 44% of the revenue in the quarter. Now, this also in the past has trended at 46-47% in historical data points. So, with the current scenario, what is it that sort of could drive this number higher? Are you seeing any reasons for this to look at 50-50 in the next 1 or 2 years? If because in the past you have commented that Turkey's devaluation does impact demand in some form. Is that causing any impact to market share, or is exports a segment where you're looking forward to grow significantly? What's your outlook on that matter?
Yes, I think the key to this lies in what happens in terms of the FTAs and preferential treatment that India gets all over the world as a supplier. And it doesn't depend only on the treaties that happen, but also on the fact that strategically what Europe and what USA and what Japan and Korea want to do in terms of giving a portion of their business away from China into India as a package. Now, we stand uniquely in a position where we can deliver the whole value chain right from fiber to garment in the value-added product from one company. And there are not many companies like us at all who are able to do this. And all this within the geography, starting from where the raw material is produced, like say viscose is at Nagda, which is like, about 100 kilometers away from us. Gujarat, where most of the Reliance fiber for polyester is available. And, we are able to manage within a geography of 400 to 500 kilometers the entire supply chain and manage to reach the port. So if anybody can achieve speed and economies of scale on these kind of formal products, we can.
Right.
And this is a significant area where India has not yet been able to grab a significant share of the world trade. But we see that this will happen for us, and we continue to try and make that happen. And I think the opportunity has never been better.
Understood. And one last question on the pricing. You did mention that given that customers do appreciate the inflation, you have been able to take a 5 to 7% price hike in garments and fabric. Will that sort of take care of the inflation that you continue to see in coal and on the power and fuel cost, or will this sort of help you to sort of get on to the margin trajectory that you had expected earlier?
It'll certainly help, but not as much, because at the end of the day, people will pay what is market price, and not more. And if our cost of power is higher than others, then it's not going to help our margin to that extent. We have to reduce our cost of power. We have to move away, and there's no other choice on that.
Understood. So this switching from the internal consumption to SEB consumption will be sort of You did mention that it does take time, but by when do you sort of on a base case basis expect that to be fully executed?
I'm not sure, because there are certain challenges in this location, and there's the concerns of the SEB have to be addressed in terms of the manpower availability right now due to the pandemic and all. But I can give you an update again in the next meeting, or I can send an update up in the website as to what would be the situation. But I think it is going to take at least a year.
Understood. Okay. Thank you so much, sir.
Yeah.
Thank you. Yeah.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as a last question. I would now like to hand the conference over to Mr. Ravi Toshniwal for closing comments. Thank you, and over to you, sir.
Well, thank you, everyone. It was very interesting for me to be back again with you after whatever hiatus we had in our time when we were able to talk more regularly. And I hope to be meeting with you all on the earnings call every quarter and give you the updates required. We are continued to, as a company, to be improving our core competencies, which are around the kind of fabrics that in polyviscose and polywool that provide value to customers who are looking for solutions in these areas. And this is somewhere where we will achieve a leadership, and we have always had the highest export in these two areas from India. And when somebody comes looking to India for any of these products, they will come to us, and we will find them a solution which works. And while doing this, we hope to be able to achieve the margin that we can get on these businesses, given the strengths India has on the raw materials and all of the cost reductions we have been able to achieve. So the last 2 years have been really a good learning. We have been able to permanently reduce certain costs and structures, which has been very, very good. The pandemic has been a blessing in disguise in many ways. And we look forward to the fact that it has given us the opportunity to consolidate and refocus ourselves towards a future where India will have a larger role to play, and we will be part of that big role for the segment that we have identified to be in. Thank you, everyone.
Thank you. Ladies and gentlemen, on behalf of Banswara Syntex Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.